Diving right back into the numbers this week, today we're going to be discussing the consumer sentiment of Germany and also the GDP numbers that came out for the second quarter of the US economy. Let's just go right into the German consumer sentiment report. There we saw the upward trend continue. I think the number came in at negative 18.4. So there we kind of see this positive trend. What I think is interesting when looking at that is, in the long term, this is the highest reading that it's had since April 2022. And so it's been a long road even just to get to this still negative sentiment, but starting to kind of climb a bit higher. What did you see when you were looking at the data and kind of trying to observe the consumer sentiment in the German population?
Yeah, what I see is that people are still very cautious. They don't want to be overly optimistic about the economy, even though the last 2 years have been quite challenging, but they made it through it. And the highest contributor to the positive trend at the moment is the expectations of higher salary. But then on the other side, what we have seen also is that the IFO business climate index has dropped. So it's the third month in a row where it has been dropping to a number of 87, yes, from 88.6 or something like that. So, of course, there are like negotiations where the outcome already has been and will further be to pay higher salaries. But that also means if you're negative on your outlook from a business perspective, that it means maybe I have to pay higher salaries to the individual employees, but that also means that I can employ less people. And we do also see that the unemployment rate in Germany is increasing, so it's now at 6%. It has come in 2022 from 5.5%. Previous months it was 5.9%. So it will be interesting what kind of effect it will have on the unemployment rate. And it's also from experts that they are also cautious on this upward trend in the consumer sentiment, that they say it doesn't need too much. And it will turn negative or further negative again.
Yeah, which to look at the whole picture of where the consumer sentiment in Germany turned negative, you have to go back to 2020 when COVID broke out and the pandemic regulations were put in by various governments and restrictions. And you saw, despite huge amounts of government spending, the consumer sentiment tanked. And it hasn't recovered really since that point. It's far below where it was pre-pandemic levels. And Germany's really taken a beating. I mean, not only did you have the COVID and Germany being quite stringent in terms of the openness of their economy inside of the country during that time with the regulations, but then further you had the war in Ukraine break out and how that had a huge effect on the German economy in terms of prices of energy spiking through the roof and then a recession. And so, this whole picture of the German population taking this beating, and the one thing driving their sentiment is maybe finally we'll get higher salaries, and so I think the caution is well taken of saying, hey, this might turn negative again. We've been pretty banged up for the past 4 years, and where we are kind of coming out of this recession, I think the population is still holding a lot of that insecurity of what the future looks like.
Yeah, and it's also on a broader term that the global economy shows quite some cracks. So China isn't doing well. We're coming to the US, which seems to do well, but there are also some concerns about that. So since Germany is an exporting nation, there is also some threat coming from abroad where they don't know, okay, how much can we still export going or moving forward?
Yeah, so I think that's a great point and a perfect transition point to move over into the GDP numbers that came out of the US. For the second quarter, they were revised up from Q1, I think it was 1.4, and now it's 2.8.
Yeah.
So really a huge jump, beating forecasts. Seemingly to the top numbers, looks like there's enough now that the Fed might want to lower interest rates or say that the economy is in a better place than they thought, and where it looks like it's on a good trend, so maybe they can begin lowering interest rates. What are your kind of thoughts when you look at the U.S. economy? Because we can dive into the numbers and show and look at and see that there's an upward trend, but there's still some challenges.
I think the one thing which raises the most attention for me is the discrepancy between the actual number and the forecast, because the forecast was about 2% and 2.8, like despite of 2, that's a huge difference. And so the question really is, where does this difference come from? Because these are not like regular people doing these forecasts, these are experts in their field. And so there has been like a lot of also consumer demand, which has gone further up. But then on the same time, we also, as we have mentioned before, the savings rate, which is going down. And so the question really is, how sustainable is this GDP growth, and how confident is it for the overall economy, but also in particular for the Fed to say, okay, let's say we have fought or successfully that inflation, and we can lower interest rates.
Yeah, and I think the other side is to not forget that it's Q2 is the beginning of the summer in the U.S. When you looked into the numbers, a lot of the drivers of that were recreational goods or spending on kind of these, I wouldn't say vacations, but also these event or type of excursion outdoor activities when the people in the U.S. love to go outside, love to be doing active things, whether that's four-wheeling or whatever that is outside. So there's a lot of this push in demand, especially for gasoline. You saw a huge consumption. Well, people are starting to travel around the States. Maybe they're not flying abroad. So there's a lot more of this spending inside of the country that I think you can see a big tick from. I think we're going to have to go into Q3 to really see, okay, is this going to be sustainable? When people start looking at the end of the year, some of those bills coming up, thinking about, how am I going to make ends meet? As opposed to right now, it's summer, I feel good, I want to spend a little bit more, I want to enjoy some things. So I think there's some caution to take there, especially when you look at crude oil reserves and gasoline reserves are falling. I mean, seemingly week after week. There's some upticks here and there in between in terms of reserves, but there's a lot of things shifting that kind of show, okay, we're doing good, but at the same time, there's some areas that are problematic. I think one issue that is always interesting to look at is the deficit of the U.S. In terms of, I mean, we almost beat this too much, but at the same time, it's something that's a real concern when you look at where kind of the U.S. dollar is connected to that kind of strength that we've seen it have. A lot of also the spending that we see, this growth was heavily from government spending on government programs, because we have a lot of these spending packages that came through that are putting inflationary pressures, but also lifting the GDP because they're putting dollars into the economy. And there you have to be a little bit cautious of, okay, how much effect will interest rates have on fighting the inflation, because there's upward pressure. And if they lower that, will inflation then tick up again a little bit? Will it not? What will it do in the value of the US dollar? And that's something that we're really going to have to watch, come probably September, when that first interest rate decision might be made to move down. I mean, next week we're going to be talking, there's the Fed interest rate decision is next week. It's one of the things we'll be talking about. Probably not anything is going to change, especially it being the meeting before the Jackson Hole convention. So we'll have a look there. But other than that, it's a challenging environment at the moment in the U.S. to see what the future holds.
Yeah, definitely.
Cool. All right, so as we mentioned, next week is the Fed interest rate decision, as well as some inflation numbers coming out of the EU and Germany that have been quite a lot better than the U.S. So we'll see if they continue to move down in the right direction.
Wonderful.